Hi you guys, welcome back to the channel. My name is Brad, this is the Firefighter's Financial Toolbox. I always tell you that I enjoy questions because quite often, a lot of the time when I get a question I don't know, I spend some time looking into that subject. About a week ago I made a video on which is better, the S&P 500 index or a total stock market index. And one of my commenters, Robert Ford, asked, what about the Nasdaq 100 index and what I thought about that? Well, first of all, Robert, thank you for your question, and I answered you that the most common ETF out there is QQQ, and I knew that the Nasdaq 100 was index of Nasdaq companies with 100 companies. So I decided to look into a little bit more detail and do a little video on the Nasdaq 100 index. First of all, what is the Nasdaq? Nasdaq is the National Association of Security Dealers Automated Quotations. Now the Nasdaq is the second largest stock exchange in the United States, you guys, behind the New York Stock Exchange. They're both headquartered in New York City, okay, so they're both there. The difference in the Nasdaq is it was the first electronic exchange that allowed investors to buy and sell stock on a computerized, speedy, and transparent system without the need for physical floor trading. If you remember those videos where they're all out there on the floor in a mad dash to buy and sell stocks. The second reference is to the Nasdaq Composite Index, which, like the Dow Jones, is a measure of a portion of the market. In this case, 100 companies listed on the Nasdaq. When I answered this question, you guys, I told them that I thought most of the companies were mainly tech, because if you think about Nasdaq, you think about tech companies. What I didn't realize is there is not a whole lot of funds out there. I found the USAA Nasdaq 100 Index Fund, that's ticker USNQX, which is the index fund version, and it looks like you can buy it through Fidelity. I also found that you can buy it through Charles Schwab, and in both cases it does have sort of an expensive ER for an index fund, you guys. It's 0.48%, so 48 basis points. If you think about that, that's almost 0.5% for an index fund. First of all, the Nasdaq 100 is the 100 largest companies listed on the Nasdaq by market capitalization, excluding financials. So it excludes financial companies. I thought it was mainly made up of tech companies. The other fund that I found is the Nasdaq 100 Pro Fund. The ticker is OTPIX. And you guys, this has an investor class gross expense ratio of 1.44%. That's insane. It's an index fund that they're charging 1.44%. And if you have the service class, which is a lower fund, and that's ticker OTPSX, then you're charged 2.44% for an expense ratio. That is absolutely ridiculous. I don't know why anybody would pick that. Now, the most common one out there that everybody knows is QQQ. That's the Invesco Nasdaq 100 ETF, or the Invesco QQQ Trust is what they call it. It covers the Nasdaq 100 index in ETF form. Now you guys, this is a little more reasonably priced. This has an expense ratio of 0.20%, so 20 basis points. So you're paying $20 per 10,000 per year. That's a little bit more in line with reality. Those two other funds were, one was moderately high and the other one was insane. I don't know why anybody would pay 1.5% for an index fund. That doesn't make any sense. But anyway, let's take a look at what this does break down into. So if you look at the sector allocations of QQQ, and it's going to be fairly similar for the other two, you guys, because it's an index. You see that almost 47% of it is in information technology, which is what I thought. But I didn't know they also have about 20.38% in communications, 15.5% in consumer discretionary, 7.69% in healthcare, a little under 6% in consumer staples, and they also have about 3% in industrials and utilities. If we take a look at the top 10 holdings, we see that the top 10 companies are Microsoft, Apple, Amazon, Facebook, Alphabet C shares and Alphabet A shares, so that's your Google, Intel, PepsiCo, Cisco Systems, and Netflix. So all your FANG stocks, those are your biggest holdings. Now, there is a total actually of 103 holdings in the Nasdaq 100 currently. But remember, there's no financials. You guys, is it worth investing in? I think it could definitely be part of your portfolio. A lot of the companies that are covered in this, if you have an S&P 500 index, you already have them. And certainly if you have a total stock market index, you have them. If it was something that you wanted to add as a small portion, I think it makes sense. I think that considering the fund's expenses are the most important thing. And I certainly think you could get either a S&P 500 index or a total stock market index a lot cheaper, and I think it would perform just about the same. Now we know the Nasdaq has been on a tear. Part of that is because Tesla's gone up huge, Apple's gone up really well, and of course the tech stocks have done well. But you guys always remember, past performance does not tell you what's going to happen in the future. Consider that when you make your choices. Always think about investing for the long term. Always consider the fees. The fees add up over an investing lifetime. And I want you all to do well. All right, hope you got something out of this. If you did, you guys, give me a like. Turn that little thumb blue for me. It really helps the algorithm. If you're not already subscribed, you guys, subscribe to the channel. Ring that bell. You'll get notified every time I make a video. I try to make at least 1 or 2 a week. And we'll see you next time. Thanks.